Hi, good morning, everybody. I don't think I know many of you on the call today. So my name's Carol Hall and I'm the investment manager for Angel Invest Wales. We're here to build the Angel Network and we're linked within the Development Bank of Wales, who deploy Welsh Government funds into SMEs in Wales. I've been in my role for 5 years, helping startups get often their first seed investment from angel investors. So today, I just wanted to do a quick talk through my experience of working with entrepreneurs and kind of giving you a kind of a elevator pitch in terms of the journey you're going on and the pitfalls and the things to think about as you embark on that journey. So there's only Adrian, Ismara, Simon and Richard. So there's only 4 of you today, I think, unless there's anybody I've missed. So if you want to talk as we go through and ask questions, I'm more than happy to do that. We've allowed an hour. I probably won't need to present more than 20 minutes, so we can utilize it as we are. Before I start, do you want to give me a little 2-minute elevator pitch about who you are and where you are with your business right now?
Well,
you're in the top of my screen, so do you want to go first? Sorry.
Yeah, that's fine. I run a business, a language school for the last 16 years based in Swansea. And I'm open a new arm of the business at the moment to deliver the courses online. It's a platform online on towards the health sector. Then it's a different thing. However, I'm interested in the angels because I've got other projects in mind. And also I have a building which I just got the planning permission to convert into flats. And I would like to know more about properties, conversion and opportunities for people maybe to invest in one of any projects I have. I've got a few, to be honest.
Okay, good. Well, I can definitely help you with the businesses and growing businesses. In terms of property development, we don't work with angels in terms of property investments, but at the Development Bank of Wales, we have a whole fund dedicated to commercial property investors. So
Okay.
if you remind me at the end, I can introduce you to that team and they will invest alongside property developers.
Thank you. And just one more thing. I've got an interest as well in develop something towards health, it's like technology complied with longevity, let me explain a bit more. My son just finished his doctorate in biochemistry and dealing with research and different things. And we are working few ideas at the moment to see if we could, because to open like a health center, something in this along those lines in Wales, because we tend to do health checks and things like that and preventive medicine abroad, not here.
Okay.
And maybe I feel like there is opportunity here for him and me put this project together as well.
Okay. Well, hopefully today we can give you an idea in terms of how you need to build out the proposition for investors and be clear on the ask.
Okay.
And the sort of money you need to raise it as you get started.
Okay, then.
Thank you.
Okay, thank you.
Hey, Adrian, would you like to go next?
Yes. Good afternoon, all. My name is Adrian from a company called Glucose Republic Limited. We're developing a health and well-being app. We've had some pre-seed funding. We're looking for another installment to take us through the rest of the development. And actually, Carol, it's nice to put a face to the voice. We have spoken a few times. So, and yeah, we're just looking at our next funding round and where we think Angels Invest Wales can help us raise some of the money that's required.
Yeah, brilliant, Adrian. We haven't had long chats, but hopefully this will fill in some gaps for you today.
Yeah, great. Thank you.
Simon, would you like to introduce yourself next?
Yeah, there we are. I've unmuted myself. Yeah, I run a company called eCoach, and basically we provide online training platforms and courses, mainly to the sporting sector. And this year we've become the biggest provider of platforms to the sporting industry in the UK. So we work with all the football associations, the RFU, the WRU, Welsh hockey, tennis, all sorts of providers. And this year's been a really good year in that respect. We've also been putting together a catalogue of courses, so sports can buy courses off the shelf, as well as offering bespoke course creation. So we've seen a big increase in client base this year, which has been fantastic. But what we find is I'm kind of not able to do all the tenders I want to do with my team, and not being able to fulfill some asks because our team isn't quite large enough to be able to get to that next level. So I'm fairly new onto the scheme. So I've been speaking to Joff, and he said, this is one of the areas I'm interested in, is investment, not only sort of financial investment, but you know what it's like when you're running a company. It can be quite isolated, and your staff sometimes don't tell you the truth. So a cynical sort of eye would be quite useful to someone I can kind of just chat to and say, well, do you think this is a good idea or not? Because generally when you say that to people, they say, yeah, go for it. But I've sometimes that kind of cynical eye is missing. So yeah, it's just a really exciting time for the business. So just looking at what options are for growth, really.
Oh, interesting. Yeah, I mean, you're certainly at an interesting stage from an angel's point of view. You've proven the market and you're growing. And you're right, getting angel money will be the added value in terms of, hopefully it's an individual that's been there and done it in terms of the high growth, because as soon as you take that equity investment, the pressure's on them to continue to deliver that growth. So you kind of want that.
The pressure's always there, isn't it?
Yeah.
In one form or the other, it's always there.
So yeah, let me know what you think at the end of the conversation, and we can progress that, hopefully. Right. And Richard, finally to you.
Yeah, I came on one of these a while back, actually. So, but I was probably sort of more being nosy at that point than anything else. So probably just to sort of get my head around things. But yeah, we've got based in Carmarthenshire, so we've got a range of 4 plant-based, super healthy, a bit different dips. We've just launched another 2, and we're in. So we've been going about sort of 2 years now. And we're in Morrison's sort of regionally, we're in Ocado nationally, we're going live in Tesco in January, and then we've got I think about 6 or 7 wholesalers we're with as well, who sort of do various channels across the UK, basically. So and it's all been funded by, well, basically the do-goody business is myself and my business partner. He's got a sort of a day job, I do a day job, and then I've just sort of got it, doing it all myself, basically. And similarly, I've funded it all myself so far. So I'm probably at the stage now where, and it's good timing because I had a meeting with the accountant yesterday, just looking at sort of year to go, and then sort of thinking to next year. I could probably carry on as I am, and we're growing really well. But the reality is we've got an opportunity to, with some potential, both investment stroke, and a bit like Simon, the reality is my business partner is a chef, so he's great in terms of the products, but in terms of any business stuff, it's not, it's not really sort of as relevant. So it can be quite, so it'd be good. So for me, I'm interested in obviously someone who's from an investment, but also who can add some value to the business as well, basically.
The food and drink sector is interesting in Wales because we do have some good individuals from a food manufacturing point of view that are always looking for those food businesses that want to scale, but a lot of them haven't got the ambitions like you. So it'd be really interesting to see, the fact that you've already done a lot yourself and to get you connected to those individuals. So we'll I'll show you what we need for the platform in terms of progressing, but it sounds that the majority of you are there with a solid proposition and have made traction. So it feels like the next step for you potentially will be to get on our platform, which I can talk about. And we have a new guest. Flo, would you like to introduce yourself before we start the presentation?
Oh, yes, sorry. Can you hear me okay?
Yes.
Yeah, sorry. I'm from the Parsnip Ship. We make vegetarian and vegan food in a unit in Ogmore Vale near Bridgend. Do you need anything else?
No, if you'd like, we can get started now. So I was just telling the others, this is normally around about a 20-minute presentation. We've got a bit more time than that. So it's a small group, so you can wait to the end to answer questions, or you can just put your hand up or put a question in the chat, which Lisa's monitoring, and we can have conversations as we go. So hopefully you can all see my screen and my introductory slide nice and clearly. Fab. So let's get going. So yeah, today it's really the deck presumes you don't really know much about angel investing or what the journey looks like from seed investment to exiting the business. So I'm going to just do a whistle-stop tour of that journey and the sort of things I think that you need to consider and that will help you be more investor ready by the end of the presentation. So we'll run through the details on the agenda there. Before we talk about the journey, I'm just going to ask you to take a minute now just to think about, what does the end game look like to you? So what does success look like to you? And for some people, it's they want to build a £20 million business, they want to build a unicorn, or they want to build a B Corp with lots of employees. But if an investor approached you and said, what's my return revenue, what's the end game, what would you tell them?
I suppose I can't speak for the majority investors in the company here, but I would assume, speaking with them, that the plan is to, is a five-year plan to build a good company based in Wales, and that would probably would be looking to exit in the next five to 10 years. But that's me putting words in in the investors' mouths. So.
Yeah, I think with your business, Adrian, and being in the medtech sector, I suppose you would be saying to them, we're building this business. We are going to get approval to go to market by X date, and we believe we can get to sales, significant sales within 3 years, and we will be bought within 5 years, hopefully for this sort of value. So knowing the FDA process and the market you're in, you're either gonna be generating profits, or actually you're just going to get the license and the approval to sell to someone else. So that's kind of what an investor, I suppose, will be trying to work out where you are on that.
Yeah.
So you don't have to have an answer today. It isn't a you need to know now. It's just a case of investors want a return on investment as well as helping you. So you need to think about what the end game looks like and to be aligned with investors.
And is it always a sellout they want of some sort? Are they happy that, because you give sort of two scenarios there. One is that someone acquires the business, or it's that you've got a very successful business that runs itself, but they're part of that.
It's a good question. So if you look at the stats, the majority of companies that deliver a return do it by being acquired by bigger companies. Going to IPO is very, very rare, and it's much more risky. So that's why most companies look to eventually be bought. Investors now have a portfolio approach. So the majority of the companies they invest in, they'll want to see that sort of journey because they know that's what the majority of companies will do to deliver a return. But every angel investor is different with their own motives. So, especially if you're in the regions, it might be a case of actually you could be the company in their portfolio where they say, actually, we want this company to continue to prosper in our region. We are happy with its slower growth for longer term and to provide dividends earlier on. So there is no hard and fast rule, but you need to understand and pitch yourself to investors in the way that suits you and the way you think that will help you get buy-in from the investors.
Okay, no, great. No, thank you.
So the other thing in terms of your exit strategy and growth is there's an interesting article where you can align yourself to a type of animal in terms of your appetite for growth and investing. And it is a bit light-hearted, but it does make you think about growing. I speak to a lot of young entrepreneurs just out of uni that are looking to raise millions and millions and be the next unicorn without a strategy for future funding rounds. So ideally, you kind of need to know what your appetite is and who the funders are along that journey. I mean, in the current climate, investors are going to be more interested in say a camel than any other animal, because they want to see that you can bootstrap and stay close to profitability, because actually in the next 6 to 12 months we don't know what the VCs are going to be doing. So to survive, you might need to be closer to being profitable rather than high growth. So think about the current climate and your funding appetite, and what could happen in the next 6 months to 2 years. So along with your funding appetite, you've got to kind of align the journey. So ideally, you will start thinking about your investment rounds and KPIs. So Simon, you're in a position now where you've got your product market fit, you're scaling. You might be looking at your ambitions in terms of KPIs for the next 18 months and say, if I get 200K, I can achieve these significant milestones. So once you've got to that stage, what is the next phase? You already need an idea of what the ideal journey looks like, because what a lot of startups don't realize is they'll say, I'm going to go and raise a seed round now, and then I'm going to go to Series A. Series A means you've got to be turning over $1 million in revenue. A lot of Series A investors want 90K monthly recurring revenues. So you need to work back from that and say, well, how do I get to that point if I'm raising a seed round? Because the majority of startups actually need to raise at least 2 or 3 seed rounds before they get to Series A. So think about KPIs and what KPIs are important to get you through the next phase of fundraising. And yeah, before you start to raise, do look after yourself. It is, you have to wear an awful lot of hats. I've got a lot of time for entrepreneurs. I haven't had to do it myself, and I know the mental strain it can take on entrepreneurs. You have to wear so many hats. You have to worry about the payroll, you have to be constantly fundraising, and you're constantly trying to grow the business. So it's not easy. And that's why a lot of companies, if you can find a mentor outside of the business and looking after you in terms of your mental health, I strongly recommend that. And then the other thing you need to know before you go to investors is the tax break. So angel investing is considered high risk. The majority of investments in angels will tell right off straight away that 8 out of 10 of the businesses will fail. So the tax breaks aren't why investors do it, but it significantly de-risks it for them. So if you're aware of what you're eligible for, great. If you're not, do some research. You can look on HMRC's website. And basically, for example, you've got SEIS and EIS, but if you've got SEIS and you're raising £200,000, then and an investor invests 50K, they will get 25K off their tax bill in the same year. So their initial outlay is actually only 25K. There's more extensive tax breaks in addition to that. But if you don't know about them, make sure you do before you start talking to investors. There's 2 types of terminology. There is eligibility, you're eligible for, and advanced assurance. So initially, you just need to know you're eligible for it. You don't need to pay an accountant to go and get you the advanced assurance. And not everybody pays an accountant. They can do it themselves if they're confident. A lot of people are using C Legals as well. But if you go on the website and you're confident you're eligible for one of those, you can just tell investors that's the case. As soon as you start building traction with a fundraise, you want to try and get advanced assurance, which basically means HMRC have given you a letter to say, we believe actually we've looked at your business plan, and yes, you will get, investors will get the tax breaks. And that just gets you a little bit further ahead than other companies. You do need to name an investor to get that advanced assurance. But if you're on our platform, we can email you an email that confirms you've signed our T's and C's and that you're now live with investors, and it would be really advantageous to have that. And other companies have used that and got through the process. So work out what state, understand it, decide whether you're going for eligibility for, whether you can go straight for advanced assurance. And then the other thing is post-deal, you need to make sure you share the certificates with investors. And this is a really important part that a lot of investors forget, a lot of companies forget or get wrong because they haven't taken legal advice. If your investors don't get the tax breaks, you've started off on a really bad foot in terms of your relationship with them. Some companies have felt so guilty about it, they've offered extra shares to the investors as compensation. So there's little quirks in terms of to get right. So if you're raising SEIS and EIS in the same round, because you're raising a larger amount, then you can't draw down on the same day. You have to do SEIS on one day and then EIS on the next day, because they have to be separate for HMRC. So read around the subject if you don't know anything about it, and ask me any questions at the end if maybe you've had to think about it and I haven't been as clear as you'd like. And the other thing you need to do is try and set a valuation. It's not going to be the end valuation because it's a very subjective topic. No one gets it right because it's too subjective to have a right and wrong. What I would say is you need to understand you will come at it from one point of view, and then investors will come from it at a completely different point of view. But you need to be aligned with the investors, else a deal won't happen. So to get you in the head of the angel investors, you will probably be thinking about the high growth potential, the percentage of the market that you can take, and that makes you really, really interesting in terms of the return you can deliver. From an angel investor's point of view, they will be thinking about how high risk it is and how can they de-risk it and look for the best opportunities. So most angel investors have got a scorecard method. Well, they will, like on the slide there, they will look for certain things within the business and put a value to that, whether it's the IP, the traction you've created so fast, the value and experience of the team. They will have their own metrics and they will come up with their own valuation, and they will be looking to work towards that. This is another, when you're negotiating valuation, this is another reason to try and work out your exit from the beginning, because if you know how you're going to deliver a return, it's easier then to negotiate and validate the valuation at this point. So once you've got all those in place, you should be ready then to start having conversations with investors. So angel investors, it's not for the ultra rich and the few. It's actually far more accessible than people realize. I mean, you can utilize your own network and get them investing. And it's important that, we do demystify and get more investors investing, because if you look at the stats in a population where we're nearly about 68 million, they reckon there's only 40,000 angel investors in the whole of the UK. A lot of data doesn't go recorded, so we don't know the exact figure. That's less than 1% of the population. So part of my job is to actually say that actually it's because of the tax breaks and building a portfolio approach, more and more people are getting involved and can get involved. So when you're out there, you can obviously see who's in our network, but you might know individuals yourselves that could add some value to you and might want to join the round. Just be careful with anybody you do speak to and make sure they self-certify that they understand the risks involved. You can find the forms online for them to sign. If you're raising with us and we've got other investors, you can ask them to speak to me or join the syndicate of angels that are coming through our network. But it's definitely worth leveraging your own network too. And because they're investing small amounts in many deals, most angel investors do it as a group now. So what they will do is they will come together as a group as a common purpose. Like we've got a group that have just formed in North Wales to invest in companies up there. We've just recently seen a female angel group launched to back female founders, and we're seeing more and more of those sorts of informal groups come together. They can invest up to a minimum of £2,000 alongside each other and acts as a collective. We have a co-fund to match fund alongside those to encourage them to do so. And that's leveraged not by you as companies, but by lead investors that we've approved. So what you might find are the benefits for the angels is that they obviously get to invest in more companies and work together and have more fun, and it helps with their due diligence. For you as a founder, you've got the conduit of a lead investor that's running the round, so you're not answering to lots of individuals putting tiny amounts in. But it also means you've got a base of net investors to go back to that are already educated that you might need to go back for at least 2 or 3 seed rounds. So it hopefully eases the pain of your follow-on rounds. And obviously you've got more networks and expertise to leverage as you're going through that journey to hopefully get you to the end game. A lot of our angels and lead investors invest alongside the Development Bank of Wales. So Adrian, you mentioned you've already had investment from Dev Bank, and you're looking to raise your next round now. And our angel investors like investing alongside the technology ventures team. We know the Dev Bank can invest up to 10 million in any one company, and hopefully they're adding value and supporting those companies along that journey. So when we work with startups, when we work with investors, they often get to know and build relationships with the investment executives in that team too. So it's important to know, is your business ready for investors? Not just from the practical stuff, but actually the stage you're at and the type of business you are. So first and foremost, it's early stage. It's all about execution. So they want to know who's in the team. So the more of you there are in terms of co-founders and diverse expertise, the easier it is for the investors to evaluate if this is a good deal or not. It's more about you than it is the innovation and the high growth. So the first thing is, and some of that will go on gut, not just your background and your CV. So they very much want to be in the business with you and on that journey. Innovation and high growth is important too, because like I said, in their mind, if they invest in a minimum of 10 companies, they're probably not going to get a return from 8 of them. It's only going to be 2 that deliver the return for the rest. So as a ballpark figure, they're probably expecting a 10x return from most of the portfolio so that they can get a good return overall. And when do they invest? Again, every investor is different. Some might come incredibly early. Most of them are looking for the stage where you've got an MVP and you've got some market research to back it up. So Simon, you've got a business model that works, you've built traction, you obviously got customers that like it because you're growing. So, you're probably slightly, already ready to scale and on that journey. So that would be interesting to investors. And what they look for, when we talk about a pitch deck and business plan and financials, what the majority of investors I know are looking for within those financials for companies that are very early is your ability to execute, and normally how are you going to recruit those first customers, because most companies haven't got customers yet, but actually a lot of you guys have already. So from your point of view, you've validated your route to market. So it's more focused in terms of actually how are you now going to scale? What's your plan for that? Not just sweeping statements, but some granular detail on that, and your exit strategy to kind of back it up again in terms of the journey once again. But people is the biggest thing. The biggest risk in all of that they will see is the people and their ability to execute and build a team around them. So how do you find and talk to investors? So you can go through us. We are the main angel network for Wales, and we have a network of 350 investors that are now looking to support businesses in Wales or moving to Wales. Like I said before, you can also leverage your own networks. Quite often, a lot of founders leverage a percentage of their fund through their network, family and friends, and other industry experts. And there is a plethora of other platforms and angel groups out there. So I can't point you to any specific, because some will have their own fees that tag along with that and different success rates. So, if you can get out there and meet other founders and work out who they've been successful with, then that will help you kind of pinpoint. And, we can talk about that in a bit more detail once we've got you on the platform and seen what success we've helped you with. We can try and maybe help with some pointers further down the line. The important thing for you to understand is crowdfunding as a strategy. It's an amazing tool. It's booming. Tons of companies are using it. But it can be a hindrance for smart investors. So there's pros and cons to crowdfunding. For you, if you never want the smart money, you can pretty much get away with a higher valuation, because the crowd aren't smart, sophisticated investors, and they don't really understand what valuation means in a great detail. If you go to the crowd first and then you go to smart investors after, you could be considering a down round because you have overvalued the business. And And if you don't go to smart investors in the first round, you might not get to the next round because you need that value add to help you grow. So, I mean, an ideal scenario is you go to the angel investors, the people you consider smart and added value first. You set the valuation and terms with them, and then if you think the crowd is going to benefit you, especially with the food and drinks businesses where it can be a marketing channel for you, you might want to close around by closing it on one of those platforms. So pitching to investors, as there is a plethora of what a good pitch deck looks like out there. There's loads of guidance on that, so I'm not going to go into the detail of what you need to put on your pitch deck today, and we do have guidance on that I can email afterwards. The important thing I think for you to remember is investors will see tons of pitch decks, pitch videos. They won't retain 80% of the information, but what they'll be looking for is a really compelling story where the narrative has told them this is a really important and big issue that customers are prepared to pay for. You are the right team to deliver and execute on that problem. And you've really got an idea in terms of the end game. If they think and they want to be on that journey with you. And don't be too scientific, Adrian, especially with the medtech companies. We're always telling the PhD scientists to dumb it down and speak to as if they're speaking to their gran. And quite often, actually, in the medtech companies, it's quite handy to go along a customer journey so they can see it from the patient point of view and what the benefits are. So yeah, just make sure just remind yourself it's all about storytelling. It's a teaser. You want them to wake up tomorrow and just think, wow, I remember the 3 reasons why I want to talk to that company again. So once you start talking to investors, you need to start to get to know them. It's probably going to be more legally binding than any marriage, and maybe last longer than some. So you need to be aligned and you need to be confident in your relationship with them. So get to know them informally if you can. Try and speak to other companies about investment from them. And when we talk about aligned, again, that's why it's important to try and think about your exit, because if you haven't talked about exit and you've got different views from the investors, that will make it really testing when it comes to post-investment board meetings. And that's another important point in terms of conversations around role post-investments. Some lead investors will insist on being an NED and having an NED fee for that. Some investors will be happy to be board observers. And some will just want information rights. So what you've got to work out is, especially with our network and our angel groups, is how involved you want the lead investor to be and how are you going to leverage the group of angels they've got behind them in terms of their expertise. So get to know them and how they operate and how you leverage that network. When you start entering into legals with angel investors, these are the sort of documents that you will have had already or you'll now be entering into. So it's quite handy if we do encourage co-founders rather than sole founders, because it is more attractive to angel investors because you've got bigger skill sets, you've got each other to lean on. And angels know that most VCs won't invest in sole founders, so it's easier for you to raise. Angel investors, if they're investing as a group in a large amount, may try and issue you with the term sheet and say, these are the terms we invest in. But if you're going out to various investors, VCs and angels, you might want to set your own terms and put those out first. Ultimately, the largest investor will probably have the most rights to set the most terms. And the company will negotiate on that based on the appetite of the number of investors they've got at the table. So once you've agreed the terms, you will then move to creating formalized documents. These documents are not just for the process of raising money, they are legally binding, and it still surprises me how little companies go through these documents with their legal team before they close a deal. Investors will be having some consent rights. There'll be things you can't do without permissions. There'll be caps on salary. There's lots of things in there that you need to be comfortable with and understand, because if you do anything that you shouldn't do without permissions or consents, then again, that's going to damage investor relations. So make sure you understand those documents, whoever's helping you create them. And more and more companies are now doing what they call rolling rounds. So you can do a drawdown all in one day. Or you might find actually you have a rolling round for about 6 months where people invest anytime in that period. It's important to understand the parameters of that, because if you do get invested in first, have they set the valuation, or is that still open for discussion if you're going to speak to smarter investors later on? So yeah, make sure you've got seed legals that do it online, and I know they're very reasonably priced. You've got local firms here that do it, that build strong relationships and hopefully give you more of a personal relationship in terms of building the understanding of the legals and making sure you've got everything in it that's protected and supported for you. In terms of the costs, they're quite high. Some angel investors will insist on their fees being taken out of the round you're raising. Some investors will take it out of their own funds because they're established groups. So you need to try and make that, you need to understand the costs for you as a company, the costs for the group of investors, and how that's going to be funded. And so, you know, you might have, if you're raising 200k and a lot of that fund goes out for legals, you've already burnt into your runway. So make sure you've got that, the thought, the understanding of that before you put together your expenses. So once you've got the legals done and you're celebrating with the champagne, well done you, that's not easy. But this is the hardest stage you're going to find. If you thought fundraising was hard, this is the most pivotal time for you now, in terms of hopefully you've raised enough to give you a runway for 12 to 18 months. Hopefully you've got some really significant KPIs you're working towards. But manage your investor relations. So if the investor is an NED or a board observer, you now need to have regular board meetings, and you now need to regularly report to your investor group. So a lot of companies use a light touch but informative traffic light system. So you've got your KPIs and use a traffic light system on in terms of where you are with those. So you can update investors and let them know where you are. It's not a sales document. It's a true reflection of what's happening, how you're managing the problems, things you've excelled at. But importantly, it's an opportunity for you to do an ask to the investor base. So yes, you may have a lead investor that you share that with, or you may share it directly with all your investors. But one of the companies I work with, you know, they'll say every time they create an investor update report, they'll think of 3 to 6 asks that they need in those next 1 to 3 months, and see if there's any in the network. They'll shout out to the network in terms of anybody's got any expertise or net connections, please get in touch with us. So use it to report and to build relationships for the next seed round, but also use it as a way to leverage the angels and get them involved. And again, look after yourself. It will be a fast journey. It will go so fast that you'll soon come to 12 to 6 months down the line and you'll be like, I'm fundraising again already. It's, you know, because you have to give a 6-month runway for fundraising. So if you've got a runway of 18 months, by the time you get to 12 months, which will just come and go, you're suddenly having to prepare for the next fundraise. So it's a lot to take on board. And that's why the more you build the investor relations, the more investors going to be like, we'll follow on, and it'll be an easy way to close that next round. And don't forget, once the money has been banked, you've got some weeks then to get the tax certificates to the angel investors, because they will need them for their tax returns. So don't forget that, and get that done and out of the way so you're not worrying about it. So working with us, how do we work? So if you do want to approach angel investors through our network, the great thing about us is we're not a broker. We're not here to get a percentage of the amount you invest. We're in a privileged position to be backed by Development Bank of Wales to help build the angels ecosystem, so more good startups, early stage businesses get the funding they need. So we're a good test bed to start out, because once you've got your stuff for us, the chances are then you can go wider to other angel networks and platforms and groups across the UK. But if you go to us first, you know, those introductions will come with no fee. So what do we need? We need an elevator pitch, which is a 60-second summary of why it's a good opportunity. And that's, you know, your conversational, when you're at a networking event, that 60-second conversation you will have with people. We need your pitch deck. Video pitches are optional, but it is recommended because, you know, if you were an investor and looking at hundreds of slide decks a day, it'd be easier to have someone talking over that slide, or someone being really innovative in terms of waking you up and thinking, oh, I haven't seen one like that before. It's got my attention. So yeah, be creative, and I would encourage you to do a video pitch if you can. They definitely work really well during lockdown. We also ask for the business plan and cash flow forecast. They do go on our platform, but they're confidential. So because we've got 350 investors registered on our network, we don't like the business plan and cash flow, which are a bit more sensitive, to be a free-for-all. So you get 350 that see the pitch deck, but actually it'll only be a handful of investors that come to me and say, can you unlock those further documents for us? If you think you're ready to go on the platform, you can email me, and I can give you the email we send as a checklist in terms of everything we need to get you live. You're on the platform for 3 months, but most of the interest comes in the first few weeks, because when you go live, that elevator pitch is emailed to our angels, and that's where the conversations start. And there's several ways where we're not FCA regulated, so we're not here to tell an investor this is a great deal, you should invest. That's your job. We're here to connect you and share the deal with investors and connect investors to get a group supporting you. So there's a couple of ways that we can try and help you along the way without selling you. And one of them is doing events where every quarter we'll try, and whoever's on the platform, try and introduce them to our investors. We do a lot of networking events for our investors so they can connect and build their angel networks. So off the back of those, we normally have the second half where it's like meet the platform. So who's on the platform and who we might want to have a conversation with. And that can have some early conversations there where that leads to you doing a deal with a group of investors. But they're not as regular as you might need. So we also, once the deal's gone live on our platform, we will tell the investor network, especially if you've got a couple of investors interested, that we're doing a meet the team Q&A session. We've been doing those online and that's worked really well. But now we're out of lockdown, we're actually going to recommend people do a hybrid event. So Adrian, you're already further down the line than everybody else. So once you go live, what we would do is invite the investment executive from DevBank that's invested and issued you a term sheet and invested in the previous round to the DevBank Wales offices, and yourself, and any potential customers or partners you've got that have validated this opportunity. We'll set a date for that, and then we'll invite the rest of the network to that room in person, but we'll also be sharing it online. So we don't have any geographical barriers, and anybody that wants to just dip in remotely can join you. And that's really helps build syndicates, which is what we're trying to do. So that's how a lot of deals got done during lockdown, and it works really well. So there's a couple of things there we can do for you. And this is an example of deals that have been in the press that we've worked with. And the latest two actually are both where lead investors that got access to our co-fund have been out there and found the deals and brought them to us. They're not necessarily deals that have been sitting on our platform waiting for investors. So it's good to get out there and network with in the co-working spaces and everywhere else to try and find out who these lead investors are and connect with them. But all of our lead investors are registered on our platform and may pick up the opportunity when they take a look. But to give you an idea in terms of deal size and groups of investors, if you've got those two deals, both had between 8 and 9 investors. So you might get 10 investors or 15 investors all investing 10k. That gives you 150k from the angels, which we can match fund 150k from our co-fund. So although only individual angels might be putting 15k in or 10k in, you as a company are actually getting 300k. So that's kind of roughly how a deal might be structured. And quite often, not only do you have our co-fund and angels in that, you'll also have the technology ventures team in that as well, which is what you might experience, Adrian, as you go further down the journey. So the final thoughts really are, there's not a lot of angels out there. It's really challenging time. So make your story compelling. Don't overshare. Just make sure the things you do share are retained by the angel investors. So nail your elevator pitch and really utilize your network, because there's people that you will know that could invest given the tax breaks and given that we're here to support that could get involved. And that's all I wanted to say today. So I don't know if anybody else wants to check, if you want to clarify anything said, or any questions now.
Carol, it's Richard here. So so there's no cost for the platform itself. There's no cost. You said, is that right?
Yeah.
And so the process is we'd sort of connect with yourself, and then you just make sure we've got all the sort of documents, etc. you referenced.
Yeah, I should have mentioned that once I email you what we need, you send that back to me.
Yeah.
We're happy that you're at the right stage and you've got
Yeah.
everything. We will get you in draft on the platform, and then I'll invite you to another call where we can share the screen and you can see what the deal looks like before we go live.
Right.
It gives you the opportunity to say, yeah, I'm happy with that. Please now promote us to the network.
Right. And in terms of scale, what sort of scale are they expecting you to be at when you go on that sort of platform then? Have you got any sort of expectations yourselves in terms of sort of turnover or?
Well, a lot of companies are pre-revenue, so most of you are beyond the early stage, no traction.
Okay, yeah. And in terms of the valuation and equity, how does that work then? Because that's something interesting. It's just because obviously I was having that conversation, interesting enough, because I've actually pulled together like an investor deck, and sort of shared it with a few different people I sort of know who have invested in stuff. And then obviously me sort of then thinking about the valuation, and I was talking to the counterpart, and we were sort of bouncing back and forth. But good to get is that something, obviously clearly you want to go with an expectation?
Yeah, I mean, you need.
So I know myself, I've built a plan in terms of what I think, what investment we'll need and where we'll get to. But me then thinking about, well, okay, what equity would I then, or what would people expect? And then what would I, that's a sort of different, that's quite ambiguous.
It is, and it'll be very different for every sector because your multiples are going to be different. So understand how the multiples are set in your sector and whether it's based on revenue growth or EBITDA. And then again, it points to the exit strategy. If you think you're going to be able to create a 20 million pound business, you know what you'll be sold for. You kind of know what equity you're prepared to give. I mean, a hard and fast rule is when you're doing your first seed round, you're giving away, you're sharing out somewhere between 10 and 25% normally. But if you're a high growth company and you're going to do these multiple rounds and be going for that unicorn, then you kind of need to think, I know I'm going to be heavily diluted. So am I happy with that? Yes, because the market will allow me to, or no, I'm not because of that. So the more you understand the exit, the more you can get comfortable with the equity share. But any first investor that's trying to take more than 25-30% is a red flag.
Is that something that we'll get guidance on then as part? So if I came to you and said, this is what I'm thinking, here's my deck, here's what my sort of share raise is, this is what I'd expect back for that investment, is that something you'd sense check, or is this?
Yeah, it's very subjective, so there's no right or wrong, so no one can really give you absolute guidance. The best guidance you can have is look for industry examples of exits and what they've achieved, and try and mirror that. And it's, in the current climate, it might change, but the best example. And be careful of paying if you especially when you're pre-revenue. You're a bit further on with revenues, but even early revenues is considered pre-revenue to some companies. It's still early stages, but be careful about paying accountants and corporate house finances lots of money to do a valuation for you, because it's very subjective and you're still going to be negotiating with investors. So the best thing you can do is look for industry examples.
Okay, yeah.
So was there any other questions, or can I assume I presented really well and everyone understands me?
First of all, can I apologise for being late to the call? My name's Jonathan Hughes. I'm Managing Director of Penog Limited, and we traded the name Penatech, and we're involved in the research and development and manufacture of products from essentially waste materials or byproducts. And I've just got a few questions, which I apologise if you've already covered.
Yeah, no problem.
I've heard the figure of investors expecting a 10 times return on their investment. Is that in terms, how is that financially qualified? Is that in terms of dividend and share value, the value of the share increasing? in time? Is that what makes the 10 times 10, or?
No, it's normally on exit. So there's no hard and fast rule, and 10 is just a really ballpark figure in terms of if you think you're going to invest in 10 companies, you need a high return. So 10x tends to be the average that people and seed stage investors look for. But like I said, investors invest in their own money and for their own motives. So if an investor is building a portfolio and they know the majority are going to be acquired, they are looking for appetite in the market for acquisition. So the more your pitch deck points to appetite in the market for acquisitions and the sort of paybacks they've had and how you're aligned to that, then that looks really interesting. Or even if there's parallels in other industries that you're mimicking. But
okay.
There might, if you're more, especially in the current climate, if your growth is more modest, but you're going to be profitable and delivering returns, that given we could be going into recession and you can bootstrap, that actually might be more attractive right now to investors. So the more you can, if I was you, the more I could demonstrate I can sustain myself through periods of non-investment, the more attractive I think you'll be right now to a lot of investors.
Okay, that's good to hear. You mentioned that a North Wales fund is now...
A North Wales Angel Group.
Angel Group has now been created. How long has that actually been live? And one of my supplementary question here, because we're based in North Wales, supplementary question here is that we're very much into looking at production of products from the circular economy, production products from waste materials, and I'm just wondering whether there are funds or support around the kind of net zero agenda at all that we could tap into.
Yeah, I mean the net zero funds, are growing. In DevBank, we've always been there to help companies with their growth, but our remit is changing now in terms of our next 5-year strategy. In terms of we're there to help companies growth, but also to achieve their net zero plans. I can name the lead investor in North Wales because he was in the press last week. So if you look at the press article and you look up for Hugh Bishop, you will find he's the lead investor for our co-fund, and you'll see he reads the press article that I showed on the slides was in Anna Roberts from Explorage. So I think he's more based around Anglesey. So I don't know where you are in terms of your geographic.
Yeah, we're not so far. I mean, not so far from Bangor.
So I would connect with him now on LinkedIn and just say, I saw the PR on you last week. Great to hear that North Wales has got an angel syndicate. Can I tell you a bit more about my company? But once you go on the platform, he'll also see you on there. You could be very interesting to him because obviously manufacturing, keeping it in Wales, circular economy. There's a lot. I don't know the details, but there's a lot to like already.
Yes. Thank you very much. And just on the EIS. Is there any change in terms of the kind of length of time a business has been operating, and how that?
It's about 7 or 8 years, isn't it? So are you near to that? Are you?
Oh, we've passed that, and that's my supplementary question. If we started a new business, a startup business, and transferred IP into that business, would we then qualify?
Yeah, get some legal advice because it's not for me to say, but I know companies have done that. If you can't do that, it's how else do you incentivize the investors? Do you get them to buy in terms of circular economy and recycling? And a lot of investors are there to have impact as well as a return.
Yeah.
Some companies have said, look, we'll just try and give you more preference on liquid debt or on the sales. So we can't, yes, you've not had the tax breaks here, but actually when we sell the business, before we distribute the profits, actually you get your money that you initially write back, or whatever it is you can agree. So there's other ways to try and incentivize, but it can be initially a problem because 80% of investors across the world look for those tax breaks in terms of an initial de-risking. So you need, if you can't get them, if you can't set up another company, you need to address that head on straight away. Just say, look, if you're older, you've been there and done it, and you're more experienced, you've de-risked. You may not have de-risked it for the tax breaks, but the stats are, because you're older and you've got a network and you've got business experience, the stats are you're probably going to be more successful. So I would be pitching myself as a de-risked it from that point of view as well.
Yeah. Lovely. Thank you very much.
So anybody that wants to go, that thinks they're ready to speak to investors and thinks they've got the documents ready, email me. I can send you the email we send out for the platform. I'll copy in my colleague Tom Preen, because Tom's our operations manager. He manages the Angel Co-Fund and the platform, and I'm out there doing various other things, so I'm not as good at him getting back to you promptly. So if I copy him in, please try and get him to drive you to the platform and get you live ASAP. Timing wise, December is going to be quiet. But the new year, so you want to go ASAP now, or you want to go early in January. March tends to be good in terms of people trying to get rid of money before the end of the tax year. So the last quarter can be a good time to raise investment. Or when I talked earlier about just being eligible for or having advance assurance for these tax breaks, then is when you really want to push for the advance assurance, because it's near the end of the tax year and an investor's looking at you and another company, and the other company has that advance assurance. They're probably going to go with the other company because they need that guarantee that you can get the tax breaks. So if there's no other questions, I'll leave you to consider that. Hopefully speak to some of you again. Adrian, we're already working on it, so hopefully we can progress conversations and try and get live. I had a great chat with Richard Thompson a couple of weeks ago about the technologies, and he's really excited, so we need him on a webinar to show. Quite often what you'll find as founders is people that have invested in you are better at selling the proposition to other investors than you are. And Richard was very good at selling your technology to me, Adrian. So you definitely want other people in the room speaking for you. It gives the external validation, but they've understood it in a way that you might not have done because you're so immersed in it.
Yeah.
Okay, Carol, that's great. What's your email?
So it's carol.hall@developmentbank.wales.
Say again, sorry, was it?
Carol without an E.
Yeah.
.hall.
.hall, yeah.
At developmentbank.wales.
Right, okay, yeah, thank you.
And I'll send you what we need, copy Tom in, and then we'll drive to get you on the platform either before Christmas in the next couple of weeks. No point going on mid-December, but early in January then would be the next time to say you want to go live.
Great, thank you.
And hopefully we'll be able to support some of you in that journey. So hopefully speak to some of you again soon.
Thanks, Carol. Chat to you soon.
Thanks everyone for joining us. Hopefully see you soon on another webinar. Enjoy the rest of your day. Thank you.
Thank you very much.
Bye.
Thank you.
Bye.